So if you are this person and you just want to buy enough RRSP to give you the max tax efficiency and then you want to stop there, you would want to buy about 19,000 of RRSP. Hey everyone, so welcome back to the channel. Now we're entering the second half of RRSP season. If you still want to buy RRSP and use it for the upcoming tax return to write off last year's income, you do have to buy it before March 1st of this year. So for this week, I thought I'll quickly talk about should you be buying RRSP, and if so, how much RRSP should you be buying? Now before we start, if you haven't already, make sure you help us like this video. It will really help us with the YouTube algorithm, and also join our free private Facebook group if you haven't already. We have about 5,000 members in there. The link to join in the description below. Now I'm not going to talk about the basics of RRSP. If you don't know how RRSP works, I actually have previous videos and you can check them out here where I talk about the basics, the pros and cons, and all the features you need to understand about. So here I'm just going to jump into should you be buying RRSP or not. I think that's the first big consideration everybody should have before they even think about how much RRSP they should be buying. And here I would say the biggest question you should ask is, this money I'm about to buy into RRSP, what is it supposed to be used for? So typically, if you are going to invest money for the following three reasons, you should definitely consider RRSP first. Number one is if you are using it obviously for retirement for very long term. Number two is if you haven't had 35K of RRSP and you are going to use this money eventually for your down payment on your first home, you should also do RRSP. And lastly is if you plan to go full-time back to school and withdraw some of these funds for your tuition, you should also consider RRSP. And that is because for the housing and the learning part, you can withdraw up to 35K for your first home as down payment through your RRSP home buyer plan, and also your lifelong learning plan where you can draw 10,000 a year up to 20,000 max per person. You can also use your spouse's RRSP to fund your full-time education in the future. And in those situations, I would say you should prioritize into RRSP because RRSP does make a lot of mathematical sense in the long run, because whatever you buy, you do get to write off on your income, which means you have tax saving, which means for a lot of people that's tax refund, and you can use those refunds to further compound your growth into reinvesting TFSA, non-registered, or simply just spending it on your vacation. So you don't need to use your own money for those expenditures. But if this money is not used for either three of the objectives I just listed, then you probably do not want to buy into an RRSP immediately, because when you withdraw it anytime, it doesn't matter if it's retirement or early, it will get added on that year's income. So if you're still working that year or you have high income that year, then your tax rate is going to be relatively high. You add that on top on the high tax rate, you're going to be paying back a lot of tax. If things go accordingly, you should be making more and more money as you go. That means your tax bracket, it's going to go up higher and higher every year. So if you buy it in a lower tax bracket year and then you suddenly you change your mind, you decided you need the money to buy a car, you take it back out, let's say 5 years later, you're at a much higher tax bracket, you have actually lost out just looking at the tax saving versus the tax having to pay back. So if you're in that situation, I would say probably don't even buy into an RRSP and just skip right over to maybe a TFSA or even a non-registered for now. Now, one additional thing I do want to talk about for first-time homeowner is if your budget is limited and you know for sure you cannot max every single account that's available, I would say starting April of this year, you should also consider not doing RRSP and instead move over to the new first home saving account, which you can contribute up to $8,000 per year for your first home. I've also created a previous video where you can check out how the new first home saving account works. And the reason I would suggest first-time home buyer, if you have limited resource, you should move over and focus on that account starting April instead, is because you also get the tax write-off just like an RRSP. If you fund the full $8,000, you do get to write off the full $8,000. Plus, when you are ready to draw it back out to buy your first home, you can draw all the principal plus growth tax-free, and you don't need to repay it over the next 15 years, unlike an RRSP home buyer plan. You can also use both at the same time. You can use FHSA and RRSP home buyer plan, which could easily bump you close to 100K if you have contributed over the next 5 years for FHSA. So it's up to you, but if you have limited resource, I would say starting April, you should probably do FHSA. But for now, you can still do RRSP for 2022 if you want some tax write-off and you're thinking about using that RRSP home buyer plan up to 35K for your future home. So moving on, then let's talk about how much RRSP you should be buying if you want to buy RRSP. And here you probably hear a lot of people talk about, hey, I want to buy the maximum efficient amount so that it knocks me down one tax bracket. So I just really want to spend some time to talk about this quickly because I realized working with a lot of clients, even the very high income ones, they're not exactly sure how that works. So I'm going to give you a very, very quick demonstration and teach you how you can find out those amounts yourself. So there are 3 major steps that you need to go through to really find the optimal RRSP amount. The first one is figure out all the income gross that you have made this year, including any capital gain or interest that you have made from your investments. Now for your salary, most people want to wait until they get their T4, but most of the time I would say that's too late or that's too rushed. It's probably going to come out a couple of days or maybe a week before the RRSP deadline, and that might not leave you enough time to decide. So another easy way is to actually look into your year-end pay stub, and that should give you a pretty good idea how much money you have made in total for last year. So for example, on the screen you see a year-end pay stub, and you simply need to look at your year-to-date column. They will give you a total figure of how much gross income you have made. Now, for your investments, for example, capital gain or interest, those things are harder for you to figure out right away. You can usually print a year-end summary depending on the platform, or you will have to track per transaction if it's more about stocks on how much cap gain or cap loss you have made. Now, usually for my client, if they have not done a lot of buy sell in the non-registered accounts and or they haven't really sold a property that year, so no extraordinary cap gains, we'll probably ignore those parts for that year and just focus solely on the gross income. But if you have done a lot of buying and selling, then you do want to add them on top just to really figure out your gross income. For interest, you would be adding 100% of what you made on top. For cap gain, remember it's 50% inclusion rate, so just take half of that. And for dividend, it's a little bit more complicated because there's gross up as well. So if you have received a ton of dividend from corporation or non-registered account, this part you probably want to use a tax filing software or work with a CPA to really figure out what is your gross income. Now, your next step will be to figure out any expenses or RRSP that you have bought personally or through an employee purchase plan. So for employees, you don't really have a lot of things to write off. You may have that work from home expense. I don't know if you still get to use that this year, but if we do, you probably can write off a couple $100 over there. Most of your expense are maybe coming from things like union fees or whatever from work, which should be included to your year-end pay stub already, as you can see on the screen. So if you're an employee, that's a lot simpler. Now for self-employed, this is a lot more complicated because you can write off a lot of things. So usually by this time, I will go through my own Excel and just line by line list out all the charges I've made on my business. So I have a very good idea how much self-employed expense I get to claim to reduce my gross income. Now, once you have figured out those amounts, then you can compare that to the current tax table of your province to really figure out what kind of tax bracket you're in right now. And you can find this info on many websites online, but the one that I always like to use is the one from Ernst & Young. They have a very nice table that breaks down every single province, the total tax bracket you're in with combination to the federal tax bracket. So for example, let's pull up a BC tax table. So on this table, you would be able to see every single tax bracket listed. And the thing you want to focus on is what income bracket you're in, and then the column that says rate on excess. That's basically your marginal tax rate. This is showing you what tax bracket you're actually in right now, and it's saying to you if you make an extra $1, how much tax it will be taken off, which also shows you if you deduct an extra $1, for example, from your RRSP, how much tax you'll be saving from there. So let's say someone makes $120K gross income in BC for last year, which puts them into the 38.29% marginal tax rate. So what that means for this person is if they were to buy $1 extra of RRSP, they can get 38.29% of those as tax saving, which is 38 cents. So if they buy $1,000 in RRSP, they will save $382.90 in tax saving. And if they have paid that much tax already, they would get that amount back as extra tax refund. And this will also help explain by what people were saying to buy enough RRSP to knock you down to the next bracket. So for this 120K earning person, if they were to buy $19,607 of RRSP, it would reduce their income to exactly $100,393, which puts them right on edge to the bracket. If they were to buy $1 extra, it would knock them down to $100,392, which puts them to the next bracket, and that extra dollar would only have given them 32.79% of tax saving because they're now in the next bracket. So if you are this person and you just want to buy enough RRSP to give you the max tax efficiency and then you want to stop there, you would want to buy about 19,000 of RRSP. You don't want to buy something like 25,000 because if you do that, the extra 6K that you bought will not give you that same 38% efficiency. It will only give you 32% because you're already on the next bracket. Now, for some people, actually, there are circumstances where you do want to get a more write-off. You simply don't care about efficiency. For example, if you are in a bracket where you're between 120 and 155K, you're at the 40.7%. And one bracket down, you'll notice you're going to be at the 38.29%, which is only about a 2% difference. And you really don't care about that tiny efficiency difference, then you just say, I don't care, I'm going to keep buying, even if it knocks me down to the next level. So it's the same idea if you're barely over to the next bracket and maybe like $200 will knock you down already. You basically are at the lower bracket. You're not really at the higher bracket because you're just barely over. So you also can maybe ignore the efficiency in that example. And there is another way you can think about this, because the fact that RRSP account gives you a tax shelter growth, you can also put in more RRSP upfront just because you have that money, and then you let it grow earlier, tax shelter, but you don't use all the credit upfront. And every year you just pick the amount that will give you the max refund tax efficiency, and you save the rest for the future years. But if you're going to do that, I would recommend you only do it if you have maxed your TFSA account already. If you haven't maxed it yet, I would say you don't need to prepay into your RRSP. You can just buy enough for that year, and for the rest of your fund, put it towards your TFSA if you have enough room, because both will give you a tax shelter growth. Actually, TFSA gives you a tax-free growth, so it's even better. And then every year, maybe year end, you just move some of that TFSA over to your RRSP, so then you are not committing yourself to too much RRSP upfront and then you regret and you have to take it back out. Now, lastly, a quick note on once you buy RRSP, you do have to decide where to invest it. Typically, I would suggest you always just invest upfront into like equity funds or bond funds. Speak to your advisor to pick the right portfolio for you. I do think in the long run, investing early will be investing later on, just trying to time the market. If you're really worried about this year's market, you can do things like putting it into money market first or putting in an RRSP saving account, and then just buy in slowly over the next 3 or 6 or 9 months into the market to smooth the entry. But overall, I do recommend investing into the market according to your risk tolerance. So this is something you need to talk to your advisor or planner. Now, if you're someone that is extremely worried or you just don't want to pick right now, there is also a lot of banks out there doing promotion on their RRSP or TFSA saving account. For example, Manulife Bank, from what I remember, they're doing a promo right now, and I think they're either giving 4.5% or 4.75% on the RRSP and TFSA saving account. So if you're not sure for the moment, you can also put it in there just to get some good interest to decide how you want to further invest your money. Now, if you want to take advantage of something like Manulife Bank, which is doing a nice promo right now for RRSP and TFSA, you can also check out the link in the description below. It is an advisor link where you can open an account there. Alright, so that's everything I want to share today. It's a very quick video on RRSP and should you buy and how much you should be buying. If you have any questions or comments, let me know in the comment section down below. And if you like these kind of videos, I do try to upload them once every 2 weeks, so make sure you subscribe to the channel, click the bell button to get all the notifications in the future. This is Jackie Cole. I hope you found this interesting. I'll see you next video. Bye!